Okay, let's go ahead and look at the stock market charts, looking for profitable trade ideas. I'm going to point out what I'm seeing in the market right now, and we'll, keep it relatively brief. Guys, drop me a thumbs up if you're finding value. If you're new, check it out for a little while. Subscribe, nothing to lose there. And then finally, if you're interested in learning this as a skill set, I have a course. It's about 5 different videos put together. I also give you guys a checklist on what to look for and really looking for the key setups on trades. Priced affordable, link in the description below. Finally, private member group. I haven't been super active in there the last few days because the market's been going nowhere and there's just not a whole lot to really talk about. But in general, I am in there giving additional market insight, additional trade ideas to that private member group. Check it out if you're interested. Link in the description for that one as well. Okay, triple Qs, guys. Again, just another day of the same old thing. I mean, we really, this is the daily chart of triple Qs. We've just been stuck in this kind of sideways grind almost 3 weeks now. And that's it. No change there. This is going to resolve one way or the other. Eventually, we'll break out of this really mundane, flat trading range. But for now, we just have to wait for the breakout. Again, we still have the negative divergence on the PPO, indicating that a breakdown is very likely. I can't put it past the bulls to maybe pop, this range. It's possible that it'll pop a little bit, continue to build divergence. That's completely possible, and I can't just throw that out. But if they just pop it up here and make kind of a newer high, it's still going to be a divergent high with a very high likelihood that it'll get sold into. So again, I'm looking for downside here. It doesn't have to happen today. Doesn't have to happen. Well, it's obviously didn't happen today. It doesn't have to happen tomorrow. It doesn't have to happen 2 or 3 weeks from now. Okay, we can just continue to grind around sideways for more time, and there's no indication in my analysis about the time element. All right, so I know a lot of people get impatient and they're like, you go back and look at the comments and everybody is so sure that the market's just going to continue going up because it is because it has gone up this year. All right, but that doesn't mean it's going to continue to go up, and in fact it's actually just really basically gone nowhere for the last 3 weeks. So that's it. We'll move on past that one. Let's look at the futures. Nasdaq futures. Here's the hourly chart, and you can see I've got another reaction. We've got another reaction at resistance. The private member group, I told you guys today, I said, look, here we are, right at resistance again. We've had several reactions. I'm counting 7 or 8 now, so definitely getting long in the tooth in terms of this range. It should break one way or the other relatively soon. I do like the fact from a bearish standpoint, the things that I like on this chart that I see in the short term on this hourly chart is, boom, I've got negative divergence. This little high right here was a divergent high. It also was a breakout above this range. You can see all the reactions we've had here, and we kind of broke out, and then that breakout failed. So to me, that means, okay, that's a false breakout, and we're likely going to head to the bottom of the range. So, again, today they just rallied it into resistance again. I think we're heading to the bottom of the range relatively soon. And then once we're down there, we need to see a break of that range for kind of the next confirmed sell signal. A nice impulsive breakdown from that range would really help. And something that sticks, not just a thing we don't want to see a breakdown and then a recovery. We want to see a breakdown that actually sticks to help confirm that we're very likely starting the next bear leg lower. Okay, that's where I think we're going. Of course, I don't know exactly when. All right, we might just grind around here for another week. Okay, so top of, there's your resistance. It's 13,2010 or 208, something like that, and then the support's about 12,977 or 1,300, right in there. All right, that is it on the Nasdaq futures. I don't see anything on here's SPY futures. You can see it's kind of just grinding higher. It just continues to kind of hold support. Little breakdown today, but they recovered it, and it's just still holding support. So no change there. And then if I look at the SPY, S&P 500, again, we're grinding higher, I would say, but it's diverging. All right, each little grind higher is just building on a divergence, which tells me that the upside's limited, and we can grind higher, maybe kind of make another little high, but eventually we're going to get some sort of a gap down that is likely going to trap all these bulls. Okay, semiconductors, SOXX. You can see we're just kind of riding this uptrend line right here. All right, we're just kind of holding the trend. Little development today is we gapped down and we weren't able to really recover that trend line. So something to watch there. It's not impulsive. It's close enough to the trend line where it's just, I don't consider that a sell signal. Again, my trend line might be slightly off or something like that. So it's close enough where it's not going to be considered a full breakdown. So we'll see how that plays out. SMH is another way to look at that. SMH here. Now this one is just another semiconductor index, but you'll see here, I kind of, right here, I haven't grabbed that little low right there. And I do have that one there, but if I adjust it and just kind of move it down, we're basically right there at support. So I'll just leave it there for right now. Again, just kind of holding that trend line, not breaking, but we do have negative divergence on the daily. So again, we have a bearish setup. It's clearly a bearish setup. We're just waiting for the break of this trend line. The break of the trend line, I believe, is going to, I believe we're going to gap down to somewhere right around here. Let me check the percentages just to see how that's even really. Yeah, I mean, I think we're going to gap down maybe 4 or 5%, something like that, and trap a lot of these bulls that have been buying the dip for the last 3 weeks. The divergences are telling me that momentum is dropping, so we're just waiting for that. And that's all I see on that. Let's flip over to the FANGs. Amazon, they were rallying Amazon today, but still just really within, kind of within this range right here. The 200-day is just overhead, so they could pop it to the 200-day. I think it gets rejected there. I don't see us going beyond that. We do have this island reversal top right here, so you ideally want to see that hold and not really recover that price, and that's what I'm looking for on that. So still within that range on that one. Google, they've been selling that, but again, on Google, you can see this is your downtrend line here, and you have a breakout, and you're kind of coming into it, so we're kind of at support. So we'll see. A breakdown from here is bearish, especially a break below the 200-day moving average. You get back down in this range, and it's very likely lights out. All right. Until then, we're just kind of holding around in support. And here's Apple. They popped Apple just slightly up 0.7% today. Nothing crazy. At big resistance here, right there. And as I roll out on the daily, there it is. You can see resistance, resistance, resistance. And yeah, and we're basically right there. So not a breakout, and we're also creating this bearish rising wedge. I marked this out, bearish rising wedge here. So you can see we're wedging out, getting pretty much to the apex of the wedge. Earnings coming up, so they might try to just grind this thing, up into earnings. But negative divergence right there. All right, it's confirmed. You can see today, let me zoom in on the PPO. You can see today they're trying to cross it back over. I suspect, and this is what I'm just thinking, is they reject it tomorrow like that and it turns back down. Okay, to keep that negative divergence intact, keep the confirmation intact. That's what I'd be looking for. So I suspect they'll break it, sell this thing down tomorrow and hold the divergence, hold the confirmation. Okay, Meta. Bearish rising wedge pattern here. Still holding that wedge. No breakdown, no definitive breakdown, so no change. Microsoft, just again, you can see we're just going nowhere. We're not going up. We're not going down. We're just grinding sideways. We have negative divergence. We have the confirmed bearish PPO crossover. So we just need to see price start to break down now. GDX, the miners, you can see the continuing to sell down a little bit. Now we've got support, decent support right there at 33.36, so a little bit more, and we'll probably hold that support. Maybe likely get at least a 1 or 2 day reaction or bounce off of that level. The bulls are going to be stepping in there. I think it's very likely. So a little bit more downside, and you're probably going to get a bounce. And then again, this thing might just chop sideways for a little while too. So that's all I see. And until you take out that support level, about 33.40-ish, then you're probably going to bounce and hold support. And if you take it out, then you head down to the next level, which looks to be about 30.75. TNX, this is the 10-year Treasury interest rates, which basically everything's based on the 10-year mortgages, car loans, everything, credit card interest, up today. So interest rates have been rising. They've been rising since April 6th, it looks like. They're up about 10, 12% or so from those lows. And 12% increase from the lows. So interest rates sitting about 3.6%, the 10-year. And rising interest rates is bad for growth stocks. So we'll see. We'll just continue to watch this. I mean, at the end of the day, if I roll out and look at the daily chart, you can see I've got an upward trend in interest rates. And rolling out, there's another reaction right there. So the trend is up in interest, which should mean trend is down in tech and growth stocks. It's just a matter of when tech gets the memo. And very likely, what I think is that tech is continuing to build that bull trap. It'll get the memo in one day. Many of the bulls recently, the late to the party bulls, will all of a sudden realize that they've been trapped, and there's no getting out of the trap at that point. So, they'll just have to take the losses. And that's what I think is happening in tech. Again, I can't confirm, but that, the setup is clearly there. We keep popping up, fading, popping up, fading. Time frustrates the bears because they're not making money. They're not necessarily losing money, but it's kind of like gives you the money when it runs down and then takes it away. Gives you the money and takes it away, and it's just chopping around. So it frustrates the impatient bears and emboldens the bulls. All right, bulls feel like they're Teflon. All right, they can't get hurt because every time the market drops, the dip buyers step in and it's pumped back up, and so they feel invincible, and that's essentially what keeps them in the trade. And then eventually, the way I'm viewing the charts, maybe I'm wrong, but we gap down and we basically trap all the bulls who thought that they were invincible. They now get trapped into the losses, and then we start to roll over. Okay, so that's what I'm thinking is going to happen. I mean, just to kind of reiterate that the market is just stalled out, here's Roku. You can see basically Roku started rallying really the beginning of the year. All right, we had a low right here, and we rallied to a high about 98%. But most recently, towards the end of that rally, you really have gone nowhere. All right, I mean, if you've been holding this thing since early February, it's gone nowhere basically. You've made no money. You haven't lost money. You haven't made money, and it's just, you can see we're just going nowhere. And that's really how the market is behaving too. It's just looks like it's just kind of topping out, to me. This just looks like a topping pattern. So no indication here, obviously, on this specific stock for much, but earnings coming up. So it's likely that a lot of these stocks are just holding out for earnings, and then the market's going to make a decision after earnings. And Tesla just reported earnings. Looks like so far they're selling it off. Now, again, I don't read too much into what happens after the hours. I'm really more interested in what the market's going to do tomorrow on this when it opens up. So we've got some support right in here at about 167.40. And so we'll see how we open up and where we open to. But so far down about 4% in the after hours. And that's kind of what I'm seeing. So if we gap below this area and start to really sell off, then I think that's going to be, an indication of what I believe the tech sector in general is going to do. So things to look at on that one. So far being sold down 4% in the after hours. Guys, that's all I really have. There's not a whole lot. Just wanted to give everyone a quick touch point for today. So I'm going to go ahead and wrap up. Drop me a thumbs up. Catch you on the next one.